Let's load. And five, four, three, two, one. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is an amazing way for you to exit highly appreciated assets, defer millions of tax in crypto, businesses, real estate, so you can create and preserve more wealth or help your clients, friends, and family do the same. Hey, we're also streaming on Expert CRE Secrets podcast, where we talk about commercial real estate secrets and ways to grow your wealth there. Hey, I'm excited about for those who don't know me, my name is Brett Swartz, and we have some of the best people on the podcast. We try to have some of the best real estate, business minds, financial, to leadership, to kind of really help all of us make complex tax deferral strategies simple, and then passive income plans achievable as well. I'm excited about our next guest. He is the founder of Peak Profit Solutions and a tax savings architect. He brings over 20 years of successful business operations and high-level consulting experience to the table for the clients, his clients and financial professionals he serves. He's out of the great state of Florida, Gainesville area, and he also is a former Marine Corps sergeant in Bravo Company, 4th Marine Division. Please welcome to me, Mark Myers. Mark, how you doing?
I'm doing great, Brett. Thanks so much for inviting me. Excited
And
to be
for
here.
absolutely, and for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, absolutely. Interesting enough, people chuckled because my undergraduate work and my master's work at the University of Florida was in sports management, exercise physiology. So, 25 years later, they say, how are you a tax savings expert? Well, in New York and California, I ran some really high-end health clubs, and I opened up a number of locations for a club company that went from, when I started with them, at 12 locations. Now they're at over 100. So in that process, I really learned how to be a great operator. And a lot of time, how I was treated as an operator was an owner operator, and I was bonused off of EBITDA. So it was always about driving revenue, reducing expenses, and driving the margins. I just realized I had a good knack for it and didn't necessarily need to stay in the fitness wellness realm, and knew that I could earn a little bit more money for the family by moving into another area. And I did that. And I started consulting with business owners because I spoke their language. This was in the early 2000s. And it became something that grew from there. I realized literally in the last 7 or 8 years, that's really my focus has shifted almost entirely into tax planning and tax efficiency. Is that there's a lot of opportunity out there. 75,000 plus pages of tax code, and in that tax code, there's tons of discounts. There's tons of coupons that you can clip. You just have to know where to find them. And I've pretty much set my focus on working with groups that essentially know how to clip one or two of those coupons, and that's what they do really well. And then I go find another group that knows how to clip one or two more coupons out of those 70,000 plus pages. So I've accumulated a relationships with numerous groups that do that. And of course, now when I'm speaking to clients, most of them are brought to me by tax professionals and wealth advisors. I'm actually just listening to the fact pattern and letting them know that there's maybe 2 or 3 or 4 layers of efficiency that they can bring into what they're already doing. And the great thing, Brett, is I don't have to replace their CPA, and I'm generally not offering them any investment opportunities. So I'm not stepping on anybody's toes. It's just, hey, you got more money that you can keep. Do you want to keep it or not?
Love it, Mark. We're gonna get along really well. Yeah, we talk about tax flow, not just cash flow, right? And then to the ability you can hire experts to help you design and architect plans is so important. So cool. Well, Mark, before we dive into some of these creative tax reduction strategies and talk about a little bit of what you just said just a minute ago, I want to take one other step back, Mark. I believe we've all been given certain gifts in this life, and these gifts have been given us to be blessing and help to others. So I want you to go back to the earlier days, maybe the high school days. What are the 1 or 2 gifts or strengths that you believe you were given, and how does that help how you help and bless people today?
Well, great question, Brett. Thanks for asking. I think that I've definitely been blessed with resourcefulness. When there's something that needs to get done, I'm always looking for a multitude of ways to do it, which really ties into what I do today. I'm never looking at I've got a dead end here. There's nothing I can do. I'm looking at how many additional things can I create to get the net result that I'm looking for. And sometimes you have to be very resourceful. And that's kind of led into more of a leadership side as well. Whenever you can create seemingly things out of nothing, there's a leadership quality to that. And the Marine Corps helped me hone in on that a lot. So I would say that resourcefulness and leadership are two things that, two gifts that God gave me. And I just work really hard to shepherd them well. Um,
Love it.
yeah,
Love it, brother,
thank you.
man. Amen on that. So let's dive right into the creative tax reduction strategy. So, Mark, what's the number one secret to unlocking creative tax reduction strategies?
Ooh, powerful question. So when it comes to selling appreciated asset, Brett, you probably know this. You know this really. You absolutely do know this. Um, it's about planning in advance. The last thing I like to hear is someone that says, I sold an asset and have a tremendous amount of profit and have this big tax bill. And I say, great, when are you selling it? Oh, I sold it 2 months ago. Well, yes, the good news is there are things you can do. The bad news is you've left a lot of things off the table that you could have done. So I'd say planning and being forward looking. So the number one secret is to make sure that you are, particularly in a sale of an asset, but even if it's just regular income we're looking at, it's always looking forward. How should I be structured to be most efficient in my tax planning? Because structure is everything.
Excellent. So planning in advance, right? Timing. And yeah, there are certain things where if you don't do it beforehand, you eliminate the opportunity to do that. There are some things post, but you're limiting your options. Is that a fair summary so far, Mark?
100%.
Excellent. What's the number two secret to creative tax reduction strategies?
Think outside of the box. If you think inside the box, you're going to take a mortgage interest deduction. That's all you're going to get. You know why? Because your CPA is going to say, that's all you can do. Not that because they don't want you to save in taxes, because they're trained to just, do what they do, and getting outside of that realm and jumping into thousands and thousands of pages of tax code and applying it using a legal kind of lens is generally not the forte of a solid tax professional. That's when you're looking at the attorney side of things or the business strategist side of things. There's a reason why Amazon and Microsoft and Nike and all those companies don't pay federal income tax. It's not because they're not highly profitable.
So think outside the box is number two, which leads into the next question. What's the best way to help a CPA of a high net worth individual overcome a false belief of what's actually possible in the tax code?
I would say show them. I think, and this is the thing, I'm not fearful of a very healthy back and forth, right? Because CPAs are designed to protect their clients, and I think that's a wise thing. So really, it's about that healthy back and forth and asking good questions, and me being able to share with them specifically in business application that leads to tax efficiency, that when you review the codes, how they all integrate together. And of course, you just have to look at the black and white and use the playbook that's in front of you. So I think that's the best way to be patient and ultimately know that, hey, when I'm talking to a CPA, I want them to know I'm not your enemy. I'm not looking to disband you. I'm not looking to share with your client that you've done anything wrong or that you don't know something that you should know, because that's not the case. I'm looking to just basically create rapport and be an additional value add, right? Because there's, when you're building a beautiful building, if you just had a carpenter, I think you'd have a little bit of a limitation, so when you need the plumber and the masonry person and the engineer and the landscaper, I mean, you need all those positions to really make a beautiful building.
I couldn't agree with you more. And I think that's a great way to just show them and get to know them, right? Sometimes too, from the client's perspective, they're bringing the CPA, in the car behind them, right? As they're planning, as they're going through this, and or the back seat. In other words, instead of having them in either the driver's seat or next to them in the passenger seat, and they're doing this journey together to understand what the tax strategy is and how it works and how it's legal and all of the details. Sometimes these clients are throwing on the last minute. It's tax season, and the CPA is like, I mean, you wanted me to say yes to this thing I've never heard of, I've never done. And you won't do it unless I say yes, because they're tied to that CPA for many, many years, and it makes sense. Right. And so you can't blame the CPA to be like, no, like, and how much are you going to pay me to go on this hour-long call? So there's that tension there, right? So this goes back to secret number one, which is planning in advance, right? It's so important, and give your CPA time and energy to be able to go along this journey. But that being said, you also can't expect a CPA who's done, who knows, tens of thousands of tax returns and is not let's just say he's a he's a general practitioner, and there's nothing wrong with that. They're just going to be like a general family practitioner, like health wise. Then there's like a brain surgeon when it comes to exit planning, highly appreciated assets. So maybe tell us a story where you had to work through that tension and how you brought it all to completion.
Yeah, that's I had to work through a number of them. I think in speaking to your examples there, they were spot on. I know you've been through this multiple times. Um, it's really what time you're brought to the party. And if there's pressure put on the CPA because of the timing that they were brought to the party, an additional layer of patience has to be in place. So I will tell you that, I was brought to the party at the tail end of a sale of a highly appreciated business. And, it was a lot of taxes at stake that could be saved. And in this process, we really had a lot to do because it was a forward-looking structure, and that they had to change the assignment of income, because assignment of income is everything when it comes to sale of an asset. Once you have the assignment of income, the IRS has their handout saying, "Where's my tax bill?" So in that situation, I really had to slow down, take it step by step, even though it was a fast-paced environment where the owner of the asset really wanted to move through the process and get the approval. I had to just tell everyone we need to slow it down. And so long as there's no binding letter of intent and no contract in place with your name on it, then we're okay. So that process went a little bit longer than I think anybody wanted it to, but the net result was that everybody had the information they needed to make the right decision.
Excellent. Yeah. It's kind of cool. I mean, I know your background might be sports, and I think it's also military as well, obviously military, but I imagine it's like the fourth quarter. It's part of why I love it, because it's like 10 seconds to go sometimes. And you've got to bring multiple groups together who have multiple interests. We just did a business sale and we ran out of time. In fact, they brought us in like 10 days before closing. And this is over $10 million sale, huge tax. And the the clients were like all on board, but all of a sudden it seemed like the M&A advisor, you can't blame him. He's like, "Oh my gosh, like I'm representing both sides. Like these guys are coming last minute. Like this is something that's new to him." And you can't blame him for being like, "Well, it seems complicated. It seems like I wouldn't do it. It seems, all of the things." It's like, well, yeah, but if you were in our shoes paying the millions of tax, you might want to do it. So how do you help like at the M&A advisor or not just a CPA who's looking at it from a legal tax perspective, but the M&A advisor or business broker, or commercial real estate broker, or whatever, from a commission standpoint, right? Because they're living and dying on this deal closing kind of thing.
Yeah, those are I say those have been the toughest ones, Brett. I mean, when you're looking at the M&A side of things, they generally, don't have a dog in the fight for the tax burden of the seller. Their sole purpose is to get the deal closed, make both parties happy, but essentially have a check that they're walking away with, which is a commission for getting it done. So anything that disrupts that flow becomes a little bit of a thorn in their side, and they may want to squash it. So again, it comes right back to that conversation that we talked about with the CPAs. It's almost like you have to fully educate them, and at the same time, the selling side has to be very firm, and that they're not going to just let this go by the wayside.
Exactly. I like it. So that when I was shopping for lenders for my house, family house, right? And I literally called like 50 lenders, and I'm the type that's going to really find the best deal. And so I'm talking, and then my brother, who's a realtor, had a good friend who's a go-to lender, and out of courtesy for my brother, I said I'll meet with him, but he's gonna have to compete, right? And then, and I'll never forget, he wanted to meet with me in person. He told me he's gonna compete, he's gonna match or beat anybody. And I get there, and I put the paper across the table, and I say, "Hey, like this is, if you can match this, match it or beat it. You're my guy. Like I'm gonna go with my brother, but if you can't, I'm sorry." And he was upset because he looked at it and he goes, "I'm going to be losing money," whatever their model was. It's like, I'm like, that is your model. I just said, but our model is I'm paying this mortgage for the next 5, 10, 20, 30 years, right? Like this is my family. Like as much as you have, your thing going on, right? Go to the people that you talk with and have them lower their thing. So, it's hard because these M&A advisors or even commercial real estate brokers, I'm a commercial real estate broker, and I've done deals that's taken 5, 10, 13, 15 years to establish, and you do all of this work, right? And so you can't blame them to even get to this point where it's either it's going to cross the goal line, you're going to get the touchdown and closing at the big commission, or it's not, right? And any little thing can mess it up. So you can't blame them either. Like, I've been working, years to get to this point, and this guy's coming in the last 5 or 10% of the deal. Again, back to the client. That's why you should be planning. And this is also why you should really make sure that you're telling them up front, hey, Mr. MA advisor, I've got a tax deferral plan. I got a strategist. I'm working with Mark Myers. I'm working with his team, my CPA. We're not moving forward on this listing or this deal until that's laid out, right? So any thoughts on that, Mark?
No, I think you hit the nail on the head. I mean, it really is a matter of it's a symphony, and you're trying to coordinate all the different players of the symphony, and you don't want that bass player to be too loud or to have too much influence over the rest of the players. And that has to do with, again, communication is really, really important. You've got to be an effective communicator, and you've got to really keep, I think the most important thing is to always keep the seller focused on their transactional benefit and the focus on how much they have to lose or gain by either participating or not participating in this. And a lot of times, as you know, Brett, it's not just about this transaction, especially if you're putting it into an entity that has a tax benefit over time. It's about the next 30 transactions, 40 transactions. It could be 50 years down the road that you're still getting tax benefits for future sales. And that's not just on long-term capital gains. That could be on short-term capital gains, which obviously is a lot higher. So it's not keeping them focused on transactional, the cost of this transaction and the future cost of transactions, if you don't do this, are going to be significantly impacted. So if they
it's the opportunity cost, right? And this, this intense pressure. And we also talk about this with clients who are looking at qualified intermediaries. I'm like, hey, I know that you have this previous relationship with this qualified intermediary, but they're not friendly to the deferred sales trust, as an example, or they don't know about it, or they just won't even cooperate. And I have people call me and they're like, hey, I'm with so-and-so's qualified intermediary. Typically the bigger ones, they're like the big corporate ones that are huge, the 500-pound gorillas. They just kind of do it their way. They're not as flexible, and they just hold them in jail. And they're like, hey, my exchange is going to fail. I'm going to pay millions of tax. And the exchange commenter says, we don't care. Like, we don't, it's like, whoa, we'll sign anything you want us to sign. We're not holding you responsible. You're not the taxpayer. You're not giving us tax advice. We just want you to either transfer the exchange to another accommodator, and they have the reasons why they can't do that, or want you to cooperate with Brett and his team to do the deferred sales trust. And it's like this big thing. And so I just tell people, like, never, ever use them ever again. And I just send all the business to those that do give all three options, whether it be a Delaware statutory trust or 1031 or deferred sales trust. But I just find it amazing sometimes that the person who's selling, like we had one last week, he goes, well, I kind of already signed the paperwork. I've kind of already been working with this group. I'm like, well, how'd you meet the accommodator? Well, my realtor told me about them. They said they're good. I go, but you realize they're only going to give you two, a Delaware and a 1031. They're not going to give you the deferred sales trust. So if you fail, this is going to cost you hundreds of thousands of dollars. And they ended up just still going with it. They're like, well, I think I've already gone too far. It's like, okay, well, you're thinking a lot of things and you're going to be locked in jail there. And I'm just like, man, you're thinking short term, like think bigger for your family. So any thoughts on that, Mark?
Absolutely. I mean, it has to be long-term focused. And you think, most people that are in real estate generally have a longer term perspective, unless they're obviously more of a flipper mindset. But long-term is the key. And that's keeping them focused on their long-term cumulative mindset is ideal. And if they know that, if you realize every single time you have a transaction outside of an environment like a deferred sales trust, or maybe even you can get, I have a beautiful resource, Brett, that for people that are willing and ready to not, actively manage their money anymore. I'm not saying they can't continue to invest in real estate and do exotic type investments or private equity. But if they're ready to kind of step back and let other people manage their money, they can eliminate the tax and we can get it into a private placement life insurance policy without a taxable event. So now you can sell a highly appreciated asset without a taxable event. The net yield goes into a private placement life insurance policy that has a very open architecture meaning that you can do real estate, you can do crypto, you can do private equity. You don't have the liquidity issues that most private placements have, but yet you've essentially legally sidestepped the taxes, not just deferred. So it's again, going back to that long term, which is how many transactions are you going to have after this in the process of building your wealth? And the answer is just one more, or two more, or three more, or four more. Then you should be thinking, why would I sell this and leave it in an environment that still gives me the same problem next time?
Mm-hmm. So elimination versus deferral, right?
Correct.
By the way, at least that's a question. So people approach us all the time and they have a new thing. And this is good that you approach and you look at new things, right? So we typically ask like 7 questions of whatever that thing is, right? So, the first one being, hey, how long has that thing been going on for, right? That's just the timing. Oh, we've done, 10 of these or thousands of these over X amount of years or over just a year. And of those, how many of them have actually been audited by the IRS, right? And then of that, whoever set it up, did they have the audit? Did they do the audit for their client, right? Or for your client, right?
Right.
And then do they provide lifetime audit defense? So I'm curious, what is kind of your maybe your 5 or 6 or 7 questions when you're looking and you're approaching a new potential strategy to offer to your clients, that you're asking to make sure that these things have been vetted in a way that you feel comfortable with?
Yeah, I mean, actually, you're kind of going down a very similar list as mine. I think that we really run in tandem, because I do vet. That's what I do. I mean, and I don't just work in capital gains. I work in ordinary income, so helping to reduce the taxes for people that are, high income earning W-2. They don't have a lot that they can do, but they don't realize what they don't realize. But at that point, you're right. I look at kind of from top bottom. How long has this been around? Like, has it been in the tax code forever? Has anybody been utilizing it in the same way that you're utilizing it? What kind of supporting mechanisms do you have as far as court precedent? Have you seen any of this go to court, tax court? How did it fare? What was the outcome? Why was the outcome that way? How are you different? How are you substantially different? How are you substantially the same? Right? Because you might want to be substantially the same if there was a good outcome of the court case. If there was a bad outcome, how are you substantially different? So really working through that. And of course, as you mentioned, what is the plan if there is a challenge, right? Because, even, you want to make sure things aren't listed transactions, right? You don't want to do things that the government is already looking for, not because they're wrong, right? Conservation easement is not wrong. Captive insurance planning is not wrong. There's a lot of things that are out there that are not wrong, but because there were bad actors out there that took advantage of them, now the IRS is saying, I'm going to look at every single time that's done and make sure it's not wrong, right? So, making sure what I'm looking at is not a listed transaction, and also looking at it to say, will it ever be a listed transaction, right? Just because it's not a listed transaction now doesn't mean it won't be one. And the goal is everything being done correctly so far as you can see, right? Obviously, the IRS is going to call step transaction. They're going to call all kinds of economic substance. They don't like it when you reduce tax. But if you have everything lined up as a business purpose, there's a court precedent, there's tax code supporting it, there's history. Those are all things that are beautiful. But last but not least, Brett, is how do you plan to defend this in the case of a challenge? And that's really a key. And who's going to pay for it? Who's going to pay for it? And who's going to defend it, right?
So who has defended it? Who's going to pay for it when the IRS does come knocking? Yeah, is it on an IRS watch list or their listed transaction? Yeah, these are all the things you want to be asking, because there's you don't want them to say, it's never been audited by the IRS. Oh, we've never been audited. That's not a good sign. You want to have gone through the fire, right? We're so good. We're just, whoa, be careful there, right? So excellent. Hey, we're running out of time here, but Mark, are you ready for the lightning round?
Lightning, let's do it.
All right. Knowing what you know now, if you go back to your 25-year-old self with the one golden nugget, make sure to tell yourself to do.
I would tell myself to commit yourself to God earlier. Save yourself a lot of problems.
Absolutely. Second question is this. What's the number one book you've recommended or gifted the most in the past year?
I like Think and Grow Rich It's my second favorite behind the Holy Bible.
Beautiful. Third question. What are you most curious about right now?
I am curious about seeds, how to propagate them, how to create them, how to germinate them.
Excellent. Like fruit and like vegetables, or not?
Yeah.
Well, I guess it would be
Yeah.
vegetables, but it'd be,
Sure.
or I guess it could
Vegetables.
be, right?
Yeah, absolutely. I mean, absolutely. And that's, again, I'm curious about that. There's things I don't
Okay.
know, and I'm not really sure about that same question.
Excellent. Next question. What's your favorite leadership quote or theme that you strive to live by?
I like Ford. And I'm sure that someone else said it, but he got credit for it. Well, whether you think you can or you think you can't, you're always going to be right.
Excellent. Last question. After all your success, helping all the people you've helped, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
The centering always comes from faith, and the faith is grounded in prayer and scripture. And of course, when you have your family around you and you know what's most important, then nothing else can ruin it. And sometimes if you get that out of perspective, you can see in business, a lot of times people put certain things before they should, and it gets them into trouble. So those things have really taught me a lot, particularly in the last few years.
Amazing, Mark. I want to thank you for being on the show. I want to encourage you to keep using your gift of resourcefulness and leadership to help people look at multiple ways to get a result that they're trying to accomplish, especially when it comes to tax and building wealth. It's no longer just about cash flow, it's about tax flow. So you want to connect with Mark Myers. Mark, if people want to get in touch with you, where can they find you?
If they go to my website, it's the best place, peakprofitsolutions.com. And on that, I actually have some case studies that they can click links for me to send them. And I can also be available for 20-minute consultations, no cost. And don't think that you have to come with all your information. Just come ready to chat for a few minutes. Literally only takes me 10 or 15 minutes to determine if there's some good opportunity there.
Amazing. Thanks, Mark, for being on the show. Also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, or getting with Mark Myers to find out what kind of strategies he has as well, is an amazing way for you to create and preserve more wealth when you're exiting highly appreciated assets of any kind. If you want to learn more about the deferred sales trust, you can go to capitalgainstaxsolutions.com, download our free ebook. You can go to our mastermind every Friday, totally free as well, 10 a.m. Pacific Standard Time, 1 p.m. Eastern. Please subscribe to our YouTube channel, and please rate, review, and subscribe to the Apple Podcast if you haven't already. And as well, expert CRE secrets people out there. We're also co-streaming there. So we appreciate everyone listening there. As a commercial real estate or investor, you always want to know about your tax deferral options. So we so appreciate everyone out there. And we look forward to talk to everyone again real soon.